Hi everyone, welcome to the Fibonacci series, Mastering Fibonacci Retracement. This is part 2 of where we left off on Thursday. So I'll just give it about 1 or 2 more minutes for more people to join us before we get the session started. Right, if you guys have any questions along the way, please do put your questions under the questions tab. So I have both the Q&A box as well as the chat box open. Right, so if you guys have any questions, feel free to put them under the questions chat. Right, hello Summit. Right, nice to meet you. I'm good. Right, how are you? Okay, so for today, we'll be covering on Fibonacci series, right? Great to hear that, Summit. Okay, so yeah, if you have any questions or, maybe just a show of hands, like how many of you guys are familiar with Fibonacci series, right? So if you guys have any questions, right, on Fibonacci series before, we dive into the session, right, you can feel free to put them under the chat box as well. Okay, so I'll just give it about maybe 1 more minute and we will get the session started. So for today, for Fibonacci retracement, we are covering mainly on using Fibonacci retracement to find resistance. Okay, so we will take a look at the different setups and also hop onto the chart basically to practice how we can use Fibonacci retracement to find resistance. Okay, let's get the session started. Right, so for those of you guys who just joined us, we are covering on Fibonacci series for the whole of January. And for this series itself, we are taking a look at Fibonacci retracement and how we can use Fibonacci retracement to resistance. So we do use this for our live analysis session as well, right? So if you do attend our live analysis session, you can see these techniques being applied. So just a quick introduction of myself. I'm Li Sing. I provide FX advisory to institutional clients. I'm also part of a team that's recognized by the Technical Analyst Awards as finalists for the best FX research. If you guys have any questions on the sessions that were done on Wednesdays, Thursdays, or Fridays, right, please feel free to reach out to me on LinkedIn if you're watching a recording. If you're with us live, right, feel free to put your questions under the questions tab. Okay, so along the way, if I'm going too fast, right, please also highlight it either under the questions chat or under the Q&A box, right? So either one. And at the same time, if you guys have any questions, right, please feel free to put them there as well. Okay, so just a quick disclaimer before we get the session started. The information presented here, it's not to be treated as investment advice. It's for educational purposes only. So this is the agenda that we will be covering for today. So first, I will start off with an introduction to Fibonacci retracement, especially for those of you guys who didn't join our last Thursday session. So just a brief introduction and overview of what Fibonacci retracement is, right? So once you understand this tool, hopefully it will be more useful for your trading journey. And then afterwards, we'll take a look at how we can incorporate Fibonacci retracement in your trading. So in our previous session, we take a look at how we can use Fibonacci retracement to find support. So in this example, in this session itself, we will be taking a look at how we can use Fibonacci retracement to find resistance. And then finally, right, we will take a look at 2 Fibonacci retracement targets that we can use for take profits in the short positions. So just a quick introduction to Fibonacci retracement, right? So Fibonacci retracement, it's based on the idea that price movement in financial markets follow a certain price pattern, right? And this is also caused by supply-demand dynamics of it. So essentially, when there is enough supply, it push prices lower, right? If there is a certain demand for a currency pair, it push prices higher. So that's the idea, right? So price moves accordingly. And then at the same time, right, Fibonacci retracement, a bit of history on this. It's introduced by a man named Leonardo Fibonacci, right? So he was an Italian mathematician. And this itself is a technical analysis tool essentially what it does is that you pick 2 points that you want to start the Fibonacci retracement and end, right? So any 2 points. So if you're in an uptrend, then you want to pick the lowest point as the starting point and the highest point as the ending point. If you're in a downtrend, you want to pick the highest point as the starting point and the lowest point as the ending point. So essentially, using this Fibonacci retracement, right, we will be able to, when you draw this retracements, you can see that there are many horizontal lines, right, based on specific ratios that you can see, right? So these lines itself, they can serve as support and resistance levels. So the idea is that having identified your supply demand zones, Fibonacci retracement levels that line up with these areas, then these are areas that can give a higher probability setups. So there are a few ways you can use Fibonacci in general, right, in terms of whether you're scalping or doing swing trades, right? So if you're taking scalps, for example, you can actually combine Fibonacci retracements and Fibonacci extension. So the idea is that when there is a huge amount of Fibonacci confluence at this level, right, it's facing some kind of support or resistance levels. In this case, you might want to take a quick scalp of these levels, right? So this can be keeping stop losses tight within the next maybe 2-3 pips within the next low, right, below the next low, and then taking this small reaction, right? So that's one. Another way would be just identifying the higher time frame zones. So in this case, right, scalps itself, they can be very sensitive to releases, right? Especially when there's a major news release around the corner. Scalps like this won't hold. What you usually see happens is that we just see a huge spike right through these levels, especially when it's triggered by news. So just something to keep in mind when you are using Fibonacci confluence levels, right, for scalping trades. The other thing it's using it for swing trading, right, or even holding longer term positions, right? If you're analyzing it from a higher time frame, let's say on your 4 hours, and it gives you a very clear market structure, then in this case itself, on the 4 hours late, right, so assuming the prices are in a bearish market structure, the assumption is for price to continue on the downside. So essentially on the leg itself, right, and the low, you can see that 50% of this leg, right, would be the premium zone. So essentially, when price enters into this area, right, this is an area where you can get in at a better price, right, to sell, because it gives you a higher profit, right? So if you are keeping the stop loss the same, getting an entry at a higher price will give you a better position or better profit, right, if you take a shot. So that's the general idea, right? And then of course, Fibonacci retracement, the ratios itself is determined based on the Fibonacci sequence. So this is the Fibonacci sequence. The idea is that you add all the previous 2 number, right, to derive the next number. So you can see 0 plus 1 is 1, and then 1 plus 1 is 2, 2 plus 1 is 3, so on and so forth. So they're useful in helping us to determine potential exit and entry points. So when we take a look at Fibonacci retracements, right, there are other things that we want to see, right? So the common ratios that are used would be your 23.6, 38.2, 50%, 61.8, 78.6. So these are the common ratios that are commonly used over here, right? If you open up the Fibonacci retracement tool on TradingView, that's the default ratio that's given. There are a few other ratios, ones that go beyond 100%, right? And then ones that go below 100%. So again, right, you will have to test this on your markets and see which of this would be more, which of these ratios would hold better, right? So in general, 61.8% is the golden ratio. For me, I focus more on these 3 ratios, right? Especially 61 and 78.6. If these 2 ratios, it's in line with a trend line, for example, right, and also a supply or demand area, then in this case, right, these are areas with higher probability. So this is just my view, right? So please do test it out on your own, right? And then essentially what this means, right, these numbers, they represent a percentage of the price move. So if price moves up, right, when it goes to 78.6%, it just means that price retraces 78.6% of this whole move here. So that's the general idea, right? So these numbers are derived again based on the Fibonacci sequence. Okay, so now we will be taking a look at how we can incorporate Fibonacci retracement in our trading, right? So there are a few things that we will address here. One, it's basically how we can use Fibonacci retracement to find resistance. So we will take a look at market structure, supply zones, and how they combine them with Fibonacci retracement, right? So for this, I'll hop onto the chart now, and we will go through the first 2 points here first. So basically on using Fibonacci retracement to find resistance and how we can combine them with market structure, supply zones, and of course our Fibonacci retracement here. So let's take a look at an example on the chart, right? So in this example, right, let me see what we have. Okay, so this is an example of, in this case, I'm on pound dollar. So let me just clear all the drawings first. All right, so in this case, you can see here, the first thing first is that we are drawing our Fibonacci retracement. We need to understand whether prices are, what are the points that we want to pick, right? So if you want to draw Fibonacci retracement, right, to find resistance, we need to first identify the moves. So in this case, you can see that this is a clear market structure, right? In the downtrend, you have lower lows and lower highs that are being formed, right? And then what you want to do next, having identified this, is that you can see that in each move, there is this impulsive move and then that pullback, right? And then again over here. So what you want to do is to identify the general direction of the trend and take this move here. So assuming that I want to find, right, if I have a resistance zone over here, for example, if I have a resistance area over here, right, and the reason why I highlighted this as a resistance is because I saw a sharp reversal here previously. So if price comes in the area, we could see some sellers enter, right? And given that prices are in a downtrend with a break of the last low, we can assume that this trend is going to continue until, right, this high is broken. So the trend only changes if this high it's broken. If not, right, prices should continue on the downtrend. Any pullback, it's just to accumulate short positions. So that's the general assumption, right? So when price comes into this area, one other thing that you can check, right? So when price enters into this zone, right, the thing that we want to ask ourselves is if there are any Fibonacci retracement levels that line up here. So for Fibonacci retracement, right, you want to take this tool. So I'm on TradingView, right? So if you're on TradingView, you can actually open up TradingView and also practice this together. So in this case, right, this is the Fibonacci retracement tool. It's the third icon down. So this is just the first tool, right? So I used it often, the Fibonacci retracement and extension. So it just put it in my favorite toolbar, right? So Fibonacci retracement, right? And you can see that when we want to draw a Fibonacci retracement for resistance, we want to identify the highest point and the lowest point. Okay, and it's the most recent move. So you can see here, right, this is the highest point. So again, Fibonacci retracement to find resistance, always identify the highest point and the lowest point. So this is the high, this is the low. You might have other questions on it, like can I use from this high onwards? Yes, you can. Can I use from this high onwards? You can do that as well. But what would be considered good practice, right? When you draw your Fibonacci retracement, so you take out this tool, right? So take a look at the high and the low. So this is the highest point, my starting point, and the lowest point will be the ending point. So when I draw this move, right, there is something that can help you to determine which is a better retracement level to take from. So I'll just turn on the trend line. You can see this is the trend line. And this is basically the solid purple line that we have here. So check out this solid purple line. So the idea is that when you're drawing your Fibonacci retracement as much as possible, you want the trend line to be a line of best fit, right? So you don't want a case where prices are just whipsawing around the trend line. Rather, you want a case of prices as much as possible following the whole direction down. So in this case, right, this itself, the first set of retracement level that we have over here, done over here, this would be good practice, right? This one itself would be good practice. But if you take a look at the other retracement, right? So if I were to shift this retracement up to this point, which is the highest point, right? Theoretically, it's not wrong because you just need to identify the high and the low, and you can just take the move. But the idea is that you can see that when price comes into this area, you can see that it did not actually follow the purple line, right? Instead, we have this huge move across it before it continues to the downside. So you can see that in terms of looking at it from just the line of best fit perspective, the purple line doesn't really follow through. And if you take a look at the other point, right? So if I were to shift it even higher, the other highest point that we have, right, would be this area. You can see that this is the other significant high point. In this example, same thing, right? You can see that just take a look at the line, how it reacts. Overall, it's still a downtrend, but you can see how many times price actually whipsaws around it. So in this case, right, this is still a valid retracement, but in terms of looking at best practices, right, I would consider this to be the best retracement. So this one over here. Okay, so I hope that that's clear, right? So okay, I have a question, right? Very interesting question. Which time frame shows good results? So Fibonacci retracement can be applied across any time frame, in fact, right? So in general, I do it either on the 4 hours or the daily, the higher time frames. You can try it 15 minutes as well, but it can be a bit more choppy. So generally on the smaller time frames, it gets noisier, right? But on your higher time, especially if you have a very strong or rather a very clear supply demand area, right? this coupled with the Fibonacci retracement should hold. So that's on the bigger time frame, right? If you want any confirmation, go down to the smaller time frame to try and find the entries. Okay, so how to set the high and low at Fibonacci? Okay, so for the high and low at Fibonacci, right, essentially the highest point, it's just basically trying to find significant reactions. So significant swings, right? You can see in this example, there's a significant swing. So that would be the highest point. Again, this is a significant move. You want to see sharp reversals. This, in my view, for example, you can see price coming down and then there's this just small reaction here. This would not be as significant, right? You can see on the daily time frame, right? This is just a slight pullback before it goes to the on the downside. But what you're looking for is this huge movement, right? Very obvious V shapes or mountain tops, right? That you're seeing over here. Okay, so that's on setting the retracement levels. So in this example, right, you can see if you turn on the Fibonacci retracement levels, right, these are the key ones. So usually these are the ones that I use. Right, there are others as well, right? Beyond 100% would be your 1.272 and 1.618. So these are the ones beyond 100%. Okay, so these are the common ones. So in this case, right, you can see that now that we have drawn the Fibonacci retracement, right? So let me just play back slightly. So this is the Fibonacci retracement. So essentially what this shows us is that at 23.6%, right, it could be a resistance level, 38.2. So when price pulls back, over here, you have basically all these levels acting as potential resistance. So all these levels that you're seeing over here, these areas, right, these are potential resistance levels. But one thing to note is that when price breaks above these levels, they are no longer valid, right? So when price breaks above the 23.6%, right? So in this example, if I were to just scroll slightly, you can see that price continued. Essentially what it did is that price completely ignored the 23.6%, goes slightly higher, tested the 50% where we saw the reaction over here, right? So price actually pushed down slightly before it continues much higher. And then right now it tested the 78.6% before it continued all the way down. Do note that this areas itself is just a proxy, right? It's not specific level. So whenever I work with supply demand areas, I try to work with zones instead of taking it off a specific or particular level. Right, so there's just something else to keep in mind, right? So when you're trading in general, especially when you're doing your analysis, just understand that these are zones that you want to look at, right? But not specific levels. And why I would emphasize that is because if you take a look at this example, right, 78.6 retracement, you have a horizontal high where we saw that significant reaction off previously, and also prices are in a downtrend, right? So if price breaks this level itself, right, this level is not considered valid, which is why I use this retracement level just as a proxy instead of taking it off a specific level, because once price breaks above, right, you're still in a downtrend, it's still bearish. But if you're taking a look at the smaller details, right, when price breaks above, right, you can consider this invalid and you could push higher. So of course, if you want more confirmation, go down to the smaller time frame. So again, you always ask yourself, right, so how do I know whether this zone is going to hold or whether it's going to fail? So with that, you can take a look at the smaller time frames change in structure to confirm this. But just for Fibonacci retracement, another thing to note itself is that when you're drawing the Fibonacci retracement, you need to ensure that this low itself, right? So to the right of the low, so this is the lowest point where you end your Fibonacci retracement. You need to ensure that to the right of this low, there isn't a lower point that's being formed. Because if there is a lower point that's being formed, right, then this retracement level is not valid. So what I mean by this is that if you take a look at the previous retracement, right, if to just move back slightly, so let me just delete all of this so that we can start afresh, right? So take a look at this, right? So there's this retracement that you can do over here, right? So when price pushes down and pull back, right, you can essentially take a retracement from the high, and this is the lowest point, right? So this is the high and low. So if you take a retracement from here, starting from the high, ending at the low, you can see that again, right? This is a valid retracement. How so? Because prices followed this purple trend line very nicely down. And the other thing to note is that price came to the 61.8 retracement, right? And we probably would see some kind of confirmation on the smaller time frame before it continues to the downside. So this is all right, right? So this retracement itself, it's valid until this low. So this is the lowest point, right? So let me just mark out the lowest point here. Okay, so this is the lowest point, which means that this retracement level is valid as long as the lowest point still holds. If price breaks below the lowest point, then you will have to take a new Fibonacci retracement, right, using that as the reference point. Okay, so you can see from here, right, if I were to shift the chart just to the right slightly, right, this retracement level is still valid until price breaks below it. Once price breaks below this level over here, right, this would be my new ref point. So you have to shift the lowest point, right, to wherever the next lowest point is. Okay, so just something to keep in mind, right? So you can see in this case, right? Okay, so I have another question, right? So with Fibo, I can use any indicator for more clear trade to buy and sell. So Fibo itself, it's basically trying to find if there are any levels that line up with a support resistance zones, right? For me, because you can see that there's almost at every interval, you will be able to see a Fibonacci retracement level. So every interval, right, you can see one. So in this case, right, it's best that you combine this with supply demand areas. In terms of indicators, it would depend on whether, you know, what your strategy is. If you are trading, right? So if you are taking a look at continuation trades, right, in the direction of the trend, then something that you might want to consider is that when price enters into either the 61.8 zone or the 78.6 area, right, if there is a crossover below, let's say the 20 moving average, right, then that gives you confirmation for a sell signal. So that can be something that you can explore as well, right? So, but I would say that in general, yes, you can combine Fibonacci with indicators, right? But indicators would be dependent on your trading strategy, right? So if you're trading within the range that you want to look at oscillators, like maybe RSI, indicating overbought, oversold region. But if you are on trading trend strategies, then in this case, you might want to look at, for example, moving average. Or even other indicators, right? So yeah, so just, but in general, yes, to your question, Sumit, you can actually combine them with any indicators. So let's take a look at where we left off, right? So that's the first thing, right? So identifying valid retracement levels is important. Understanding where you take your highs and starting points and ending points from. Okay, so once you do this, right, the next thing that we want to cover would be on when is a, so I've covered all those 3 points actually, right? So we took a look at market structure, supply zones, and Fibonacci retracement, right? So this is an example on pound dollar, right? So if you go back to the same example on pound dollar, you can see this area. So essentially on market structure, right? So how we take a look at market structure is just identifying low points. So you can just mark out the lows and highs, right? You can see that if in this case, you have this low, this high, and then price form a new low, a new high, and then this is within the range, right? So it's still holding its internal range liquidities within the range, and then you see that break in structure over here, the break of the low, which tells us that this is a downtrend, right? And also at the same time, right, this high, unless price breaks above this, prices are still in a downtrend. And then you can see again subsequently lower lows and lower highs being formed over here. So in a downtrend, you can see very clear structure, right? So lower lows and lower highs being formed. On the break of structure, again, the pullback and price continued to the downside. So on this area itself, right, the other thing to note on market structure is that when you have a clear move, so impulsive move and a pullback, right, this is when you can use your Fibonacci retracement, right? But again, Fibonacci retracement, don't take it just in isolation. Combine them with support resistance or supply demand areas. Okay, so in this example, right? So if you take a look at this example itself here, so how I identify supply demand areas, there are a few ways you can take a look at them. You can take a look at how, so take a look at the left of the chart, right? So how prices consolidate. So these are areas where essentially it represents like very uncertain directions, right? So if prices are ranging before a sharp break below this level, right? So in this example, you can see that this is the range. There's a clear support resistance level that prices are testing, right? So essentially you have this competition between your buyers and sellers before price break and close below it. And this is represented by a strong bearish break, right? So it shows that sellers finally overpowered your buyers, and then you see a pullback for it continues to the downside. This ranges itself can serve as supply areas. So if prices break below this area and pulls back into this zone, right, these are areas that you want to consider. Of course, within the range itself, right, we wouldn't know when the reversal would happen. So for this, when price enters into the range, you need to go down to the smaller time for confirmation. So in this example, right, if we were to take a look at the daily, this is the daily range, right? You can see consolidation around this area. If you go on to the 4 hours time, we're focusing on the same area. So maybe not so much on the 4 hours, but on the smaller time frame, let's say the 15 minutes. You can see that this structures, right? So coming into these areas, you would usually see a change in structure, right? This comes in the form of a break of the last low. So let me just see if I can actually scroll back that far. We might not have enough data for that. Just going back much further. Oh, there we go. Oh, nope. Yeah, so we don't have data for that, right? Apparently it just stops at March 2022. Okay, so I can't see the smaller time frame, but yeah, that's the idea, right? So go to the smaller time frame, try and find confirmations from there. Okay, we saw quite a few of these examples in the live analysis sessions as well, right? You can see them if you want to check out the previous videos, right? You can take a look at Vantage Markets YouTube. So the idea behind this, right? So let's go back to retracement. We digress slightly there. So in this case, you can see that the break in market structure. So this is a break of structure. And break in structure comes in a downtrend, it will be the break of the last low, right? So the high will take out the low, and then you can see that this is your impulsive move. So you can take a Fibonacci retracement from high to low, right? And then in this example we saw earlier, it goes to the 78.6 retracement. So good practices, right? Again, you want to try and find direct movements instead of one where you're starting from this highest point, let's say, and ending at the lowest point, and you're just seeing a lot of whipsaws in between. Okay, so it's not that's not valid, but it's just that it's not as good a practice as compared to taking a direct movement. Okay, when is a Fibonacci retracement considered valid, right? So if you're taking a Fibonacci retracement trying to find resistance, you want to ensure that your lowest point, right, to the right of your lowest point, there isn't any low that's being broken. In terms of potential profit targets based on Fibonacci retracement, right? So this example itself, right, the retracement numbers that I would like to introduce you to will be -27 and -61.8. So in this case, you can see that if you take a look at retracement level, right? So whenever price retraces to 78.6 or 61.8, so I'll just remove the rest of the retracement level in this case. Let's take a look at these few numbers, right? So in this example, or rather in general, if you have a trend line, if you have a trend line and very clear market structure, right? So if prices are in a downtrend, very clear market structure, you also have a descending trend line that lines up with this area that you're looking for, right? So when price comes into a supply zone, you have a descending trend line. This is your supply area, supply zone over here, right? You have a descending trend line and it lines up with a Fibonacci retracement. Usually it will be the 61.8 or 78.6 because at these areas, right, this would be a good price to enter, right, with a continuation of the trend. So in this example itself, right, there are two retracement levels you can take a look at. One is -27 and the other is -61.8. So in this case, right, if you can either use -27.2 or -27, either one works, right? So not much difference, I would say. So in this example, you can see that price, basically what happens there is to the 78.6, and then you see that further push down, right? And -27 is the first area you can see here. Right? So -27 is the first region and -68 is the second area. While highlighting this, I also want to highlight this point that when you take a look at these numbers, these are just reference numbers you can consider for take profit targets, but you also want to consider, right? So whenever you have a retracement level, look to the left of the chart and see if there are any key graphical levels here. So what I mean by this is that if to the left of the chart, we are seeing a huge resistance turn support level, which also lines up or maybe lying slightly above the -27. In this case, if you're taking any short positions, it will make more sense to close your positions at this area, right? Given that prices have a strong reaction to it in the past. When price comes into this area, people who are holding short might consider either protecting their position more aggressively or taking partials. So while this is a good number, right, don't take it just blindly. Take a look at where we are in terms of the higher time frame. Take a look at on the to the left of the chart if there are any significant price action, right? And are there any acknowledgement to the zones? Okay, so just something to keep in mind. Another example you can see here, right? So if this works as well, if you're on the smaller time frame, you can see there is again break in structure here. So price broke below the low. Right, so if I were to zoom into this portion of the chart, you can see that price broke below the low. Right, and then once price, there's this break in structure again, right, on the pullback itself, this is your impulsive move and this is your pullback, so you can take a high and low over here. Fibonacci retracement of a move like this, right? So Fibonacci retracement from high and low, and then again, right, 61.8 or 78.6. In this example, 78.6 would be the region, right? And then in this area, price is actually pushed higher to the 78.6, and then again -27 and -61.8 are potential targets. Now this is a very good example of why we want to not just take it blindly, right? So in this case, you can see that price push lower. We have the -27, right, like lying slightly below -61.8, but you can also consider this area, right? So this is the previous low. It's the low where price pushed up but failed to continue to break the high. Hence, it's a weak low and it's a profit target. So on the session on market structure, right, we went through quite a few examples and also took a look at market structure and how we can consider this low, right? So in a downtrend, you want to consider the lows are constantly being run. So these are potential profit targets. So when price reaches this area, you can see that on the immediate reaction, what happened when price reaches this low at this area, right there, you have basically some people who are closing out the sell positions here, right? So essentially there's this brief movement in prices before it continues lower. Okay, so much as you want to take numbers, don't take it just blindly. Try and find, at these areas if there are any key graph levels at this. If the key graphical levels are lying slightly above the Fibonacci retracement, then you want to consider taking earlier profit. Okay, so these are two retracement levels in terms of potential target. You can consider -27 or -61.8. So this can be pretty useful, even if you have to take a look at just smaller examples here. So if you take a look at this area, so you see pretty much the same thing, right? So this portion of the chart, maybe I'll just go down to either the 4 hours so that we can focus a bit more, right? So on different time frames, it works as well. So if you see this region, so if I have to play back slightly, right, you see pretty much the same thing. So when price pushes back, this area, right? So essentially what we have the break in structure, the break of the last low here. So price broke the low and essentially this is your last move, right? The last move where price broke the low. So this is your highest point, this is your lowest point. Okay, so I'll just play back slightly. So you can see highest point, lowest price, lowest point, and then price pulled back. So you can again take a Fibonacci retracement from high to low. You can see that essentially here, right? Price pulls back and it pulls to the 61.8 retracement over here. The price pulls back to the 61.8 retracement, continued much lower, and -27 is the first target. You can see here, right? There's some kind of reaction to the -27, and then -68 is the second profit target. In this case, right, price actually missed it slightly. So which is why trade management is also important, right? If you do take a potential profit here, you either want to shift to break even or even engage a trailing stop. Okay, so these are ways as to how you can use the -27 and -61.8. I hope you find these examples useful. Oops, sorry for that. Oh. So yeah, so we there are a few examples, right? Okay, so this example, it's on, I believe this is on pound dollar as well, right? So pretty much the same examples that we saw, right? So essentially, you in this case, you can see that price basically go from high to low, right? So high to low, and you can see that this is basically the starting point, the ending point. Price pulled back to 61.8, and this is the first potential profit target at -27. This is the second one. Sometimes price just push to your first profit target, and then from there just continue much higher. So at this point, right, you want to consider taking a huge portion of the position, right? Closing out of engaging the trailing stop. Okay, and then another low would be, of course, the lowest point that you have over here, right? The lowest point would be the low that caused that pullback. So this is another example. In this example itself, right, what I wanted to highlight or what I wanted to show over here is that so the question is, do you consider this Fibonacci retracement to be still valid, right? So the retracement level is taken from the highest point and the lowest point is here. And you can see price pull back to the 78.6 before it continued to the downside, -27, right? In this case, price tested and then tested this as a resistance before it continued much lower. So my question to you, right? So take a while to think about this, right? So maybe I'll give you guys about a few seconds, right? So put your answer under the questions tab. Consider this a valid retracement. Why or why not? Okay, so yeah, just think about this and yeah. So do you consider this a valid retracement? And why not? Why or why do you not consider that a valid retracement? So again, right, the clue is that the highest point it's from it's marked out here, right? So this is the starting point taken and this is the ending point that's being taken. So in this case, right, it's not considered. And the reason for that is because you can see that this is the highest point, this is the lowest point. But take a look at the left to the the right of the lowest point. This is the lowest point, right? So draw a horizontal line. What's to the right of the point? Did it form a new low? Yes, it did. So in this case, right, this is not valid retracement because there is a new low that's being formed. So this should have been the ending point. And then when price breaks and form another low, right, then you will have to shift the retracement accordingly, which is why even we took it from here, right? So in the previous example, you can see that we took it here. Let me just go back and clear my drawings, right? So in the previous example we saw here, we actually took it from the high to low. This is fine, right? We saw that pull back into this area. This is basically to show take profit targets, right? But if you were to take a look at price, right, using the same retracement, you cannot say that price actually pulls back to the 78.6 over here, because it's not, because this retracement level is not updated, right? The high and low should be taken from this point. This is the lowest point before we saw that pullback. And then you can see following which, right, we have to do a new retracement. Okay. So I hope that the examples help you to better understand how you can find Fibonacci retracements, especially for resistance. So just a brief summary of what we've covered so far. So we talk about Fibonacci retracement and how it can be used to find support resistance levels. The common ratios used are 23.6, 38.2, 50, 61.8, and 78.6. So 61.8 and 78.6, personally, if it comes together with your market structure, and it comes with a trend line, right, this can be pretty good setups, right? So do test it for yourself. And then if you take a look at incorporating Fibonacci retracement in your trading, we saw that example on pound dollar, right? Take a look at the overall market structure, your time frame. Higher time frames in general hold more weight, lower ones would be noisier, right? And also we took a look at how we can use Fibonacci retracements to find resistance. And then finally, right, we saw the profit targets at -27 and -61.8. So these are two potential profits that you can use. But as always, right, you want to ensure that lying slightly higher than the profit targets are not your significant points, like your swing low, right? So if you're seeing a huge or sharp reversal of these levels, then when price reaches these areas, right, these are areas that you want to consider tightening your trade management. Okay. Yeah, so with that, right, I see that we have answered all of our questions as well, right? So we have no other questions. Okay. Okay, so yeah, with that, I've come to the end of the session, right? So thanks again, right, for staying with us till the end of the session, and always for keeping this session interactive, right? So it's great when you guys come in with questions. So for tomorrow, we will be doing our live analysis session. The same time as today, right? So we'll be covering that. We'll be taking a look at the setups and also reviewing any setups that you guys might have, right? So we'll take a look at those. Okay, so with that, we've come to the end of the session, right? Thanks everyone. Stay safe, trade safe, and we will catch you guys again tomorrow.